Hi, I'm Garth from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So we start the week with a look at the daily chart of the S&P 500, and what you can see there quite clearly is the market's been moving aggressively to the upside over the last couple of days. Last week on this slot, I mentioned that the 34.25 level would be a big level for the market to overcome, and if it could overcome that, then it would validate an inverted head and shoulders pattern and project to move probably back up to the prior high that we saw at the beginning of September. Now that has happened, and as you can see, the market's pushed out through 34.25. It's validated that inverse head and shoulders pattern, and it looks as if the market is now on its way back to test those highs from the beginning of September. There's a couple of gaps to the upside on the way higher as well, which is quite interesting to note. If we then zoom in and have a look at the hourly chart of the S&P 500, there you can see that inverted head and shoulders pattern in more detail. And again, there you can also see the 34.25 level in more detail as well. Notice how that was a lateral resistance level that has now been broken to the upside. And over the last two trading sessions, the market has actually gapped up on both sessions and hasn't filled the opening gap. So that's quite bullish trading activity there. There's a gap in early September, which is at 35.75, and that would seem to be a first target for this market to go and try and target that gap. And then if one actually takes the measured target from the inverted head and shoulders pattern and projects it up from where that neckline broke out, that then projects a move up to 36.25, which would imply a new all-time high for the S&P 500. So no denying that this chart is looking pretty bullish, and whilst the market is above that 34.25 area and it's above the moving averages as it is there, then I think we've got to remain in the bullish camp for the S&P 500. If we then move on to the Nasdaq and take a look at the daily chart here, there you can see again an inverted head and shoulders pattern as I highlighted last week. I mentioned that 11,600 area would be quite key to watch, and if a market was able to break above that level, then that would probably see it moving back up to test the prior highs. And again, that's exactly what we seem to have on our hands now. So the market is above 11,600. It's around about 12,000 at the moment on the Nasdaq, and it looks in all likelihood that we're going to see the market push up and go and target those highs from the beginning of September. Let's take a look at the hourly chart of the Nasdaq, and this just shows the recent trading activity in more detail. There again, you can see that inverted head and shoulders pattern quite clearly spelled out there, and you can see the significance of that lateral resistance area at 11,600, which was the neckline of the inverted head and shoulders pattern. Now, the fact that the market's broken up above 11,600 is bullish. You can see it gapped higher yesterday and the day before. So very bullish activity there, and it does look as if this market is now within spitting distance of those highs from the beginning of September. Your inverted head and shoulders pattern here projects up to a target of about 12,500, which would imply a retest of those prior highs from early September, and in fact, possibly a slightly new high to be made above that level. So all in all, a pretty bullish setup. Nothing not to like about these charts if you are a bull, and we therefore want to stay remaining in the long only or the buy the dips kind of camp while the higher targets are in place. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.